Ladies and gentlemen, good day and welcome to the Indoco Remedies Limited Q2 FY24 earnings call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rashmi Shetty from Dolat Capital. Thank you. Over to you, ma'am.
Thank you, Darwin. Good afternoon, everyone. I, Rashmi Sancheti Shetty, on behalf of Dolat Capital, welcome you all on the Q2 FY24 earnings con call of Indoco Remedies. I would like to thank the management of Indoco Remedies for giving us this opportunity to host the call. Today, from the management team, we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint MD, and Mr. Pramod Ghorpade, CFO. I now hand over the call to the management for their opening remarks. Over to you, sir.
Thank you, Rashmi. Good afternoon, everyone. Thank you for joining this call today. Let me draw your attention to the fact that on this call, our discussion will include certain forward-looking statements, which are projections or estimates about our future events. These estimates reflect the management's current expectations of the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause our actual results to differ materially from what is expressed or implied. Indoco does not undertake any obligation to publicly update any forward-looking statement, whether as a result of new confirmation, future events, or otherwise. Over to you, ma'am, for your opening comments.
Yeah, good afternoon, everyone, and thank you for joining us today. We closed the second quarter of FY 2023-24 with a consolidated sale of rupees 465 crore, of which domestic formulation business has contributed 228 crore. International formulation business has contributed rupees 195 crore. API business has contributed 36 crore and shown a growth of 95.6% over same period last year. The remaining rupees 6 crore has come from contract research and analytical business, which are the small service businesses of the company. For the second quarter, we have recorded an EBITDA of rupees 72.4 crore. Before we start the call, I would like to update all members regarding an update that we have just sent to the stock exchange. A PAI or pre-approval inspection was conducted at Goa Plant 1 for 2 ANDAs. The inspection was conducted between 12th to 18th October. And at the closure of this audit late last evening, 4483s have been issued to the plant. Our plant quality assurance and corporate compliance teams will be working very closely with the FDA to resolve any queries that they may have regarding quality issues at the site. Now to come back to today's call. At our organization, we have been continuously adopting new technologies, aiming for higher productivity in a systematic manner and therefore aiming for volume and value growth. Some of those worth mentioning are, at our Baddi Unit 1 formulation site, we have received a GMP certification from EU health authorities in July 2023. This certification is a testimony to the fact that we are committed to remain CGMP compliant and ensure supplying quality products to our customers and patients across the globe. Our Waluj plant has undergone expansion recently to accommodate volume demand from emerging and India markets. Our API facility at Patalganga has been upgraded recently to include a larger quality control laboratory facility. At our CRO in Hyderabad, a new business of pharmacovigilance is being contemplated. Various IT-related projects are being undertaken with a broader roadmap spanning HR, operations, sales, and GMP-related quality assurance, concerns. This is being done at various manufacturing sites. Across many of our sites also, projects are underway to increase batch size, improve yield, and overall bring down overheads, specifically those involving human capital. These initiatives will eventually improve efficiency at our sites and make our products more competitive. With all the process improvements underway, expansion programs, both green and brownfield, under execution at many of our sites, new product launches, and continuous increase in our ANDA filing endeavors, the organization is rightly positioned to achieve its targets going ahead. This is from me. I will now hand over to Mr. Sandeep, who will take you through the financial highlights of Q2.
Thank you, Aditi. Good afternoon, everyone. Hope you all are doing fine. Let me first begin with the business highlights. Net revenues of the company for the second quarter FY 23-24 grew by 15% at rupees 465 crores compared to rupees 405 crores. In the first half of the year, revenues grew by 9.9% at rupees 878 crores as against rupees 799.5 crores. EBITDA to net sales for the quarter is 15.6% at rupees 72 crores compared to 21.7% at rupees 87.8 crores. EBITDA to net sales for the first half is at 15.4% at rupees 135.3 crore compared to 19.9% at rupees 159 crore. Profit after tax to net sales for the quarter is 7.1% at rupees 32.9 crores compared to 12% at rupees 48.7 crore. PAT to net sales for the first half is 6.7% at rupees 58.6 crore compared to 10.8% at rupees 86.2 crore. Earning per share for the quarter is 3.60 compared to 5.39 for the same quarter last year. EPS for the first half is 6.41 compared to 9.56. Above numbers are on standalone basis. We have declared results with consolidation, which includes results of subsidiaries. The Indian pharma market is valued at rupees 55,718 crores, registering a growth of 7% during the second quarter of FY 23-24 as against similar second quarter of last year. In the IPM, Indoco ranks 30th position in the second quarter with a market share of 0.61%. The source is IQVIA, July-August 23. Domestic formulation business. Revenues from this business for the quarter grew by 9.4% at rupees 228 crore as against rupees 208.5 crore. For the first half, revenues grew by 8% at rupees 441 crore as against rupees 408 crore. Major therapeutic segments, namely cardiology, ophthalmology, vitamin and stomatology, performed well during the quarter as compared to same quarter last year. Now on the international formulations business front, revenues from international formulation business witnessed growth of 11.9% at rupees 195 crore compared to rupees 174 crore same quarter last year. For the first half, revenues grew by 0.9% at rupees 354 crore as against rupees 351 crore. Revenues from reg markets for the quarter grew by 1.2% at rupees 149.5 crore against rupees 147.6 crore. And for the first half, revenues degrew by 3.9% at rupees 283.9 crore against rupees 295.3 crore. Revenues from US business for the quarter grew by 17.5% at rupees 81.4 crore as against rupees 69.3 crore. And for the first half, revenues degrew by 1.2% at rupees 132.6 crore against rupees 134.2 crore. Revenues from Europe have degrown by 15% at rupees 63 crore as against rupees 74.7 crore. And for the first half, revenues degrew by 6% at rupees 143 crore against rupees 152 crore. Revenues from South Africa, Australia, New Zealand are at rupees 4.7 crore against 3.7 crore, and for the first half at rupees 8.5 crore against 8.7. Revenues from emerging markets for the quarter grew by 71.6% at rupees 45.4 crore as against rupees 26.5 crore. For the first half, revenues grew by 26.1% at rupees 70.7 crore against rupees 56.1 crore. Coming to APIs, the business for the quarter has grown by 95.6% at rupees 35.8 crore against rupees 18.3 crore, and for the first half, revenues have grown by 127% at rupees 71.5 crore against rupees 31.6 crore. Revenues from other business such as AnaCipher CRO and Indoco Analytical Solutions for the quarter grew by 73.6% to rupees 6.4 crore against 3.7 crore, and for the half year by 41% at rupees 11.2 crore as against rupees 7.9 crore. That's all about the business highlights for the second quarter, and I now request all the participants to put up their questions. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants, you are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Deepan Sankara Narayan from Trustline PMS. Please go ahead.
Good evening, everyone. Firstly, from my side, management had guided for domestic business for 11 to 12% for FY24. So if by going by that, H2 we need to grow by 14-16%. So are we confident of achieving that kind of growth in domestic business in H2?
Yes.
Okay, so majorly this growth will come from this stomatology division?
Not necessarily. For the current quarter, our subchronic therapies, specifically stomatological, ophthalmics, and some others have done very well. This is simply because second quarter, which is otherwise a season quarter, the season impact did not come in because of rains which came late. So to some extent the products which otherwise do well in the season, anti-infective, anti-cold, respiratory, they will also pick up in current Q3 because of the push forward of season. And therefore, I expect the second half of the year to give a growth of minimum 15%.
Okay. And also in terms of Europe business, we were expecting some 90 to 95 crore quarterly run rate, but we are doing around 70 crore currently. So what is the reason for the same, and are we expecting strong growth now from here on?
Yeah, one of our products which we supply to UK got heavily overstocked during COVID and the following years, and as a result, the orders for the last 3 months have been very, very minimum, practically zero. But the situation will improve from now onwards. We have started receiving orders once again. So that was one of the main reasons for this setback.
Okay. So we are still holding that 380-400 crore kind of Europe business for this year?
Yes, 375 to 380 definitely, and we may do better.
Okay. And lastly, from my side, so what are the margin drivers we are looking at to improve the margin from here on to 17 to 18% for FY24?
Yeah, so if you have seen the performance this quarter, you must have seen that cost of goods, we have shown good improvement. We've also shown a sustained or marginal drop in employee cost as percentage to sale. Fundamentally, things are on the right track. There have been some additional one-time or short-term expenses that have come in other expenditure, because of which our margins have got impacted this quarter. Otherwise, we would have definitely shown a much better performance. When these are shorter term kind of expenses, I would not call them one-off, but definitely not perennial. So therefore, we believe that the margins will improve. Also, as you might have heard in my opening remarks, there are a lot of initiatives being undertaken to actually bring down the cost of operations across all our sites. So I feel very confident that going ahead we'll be able to deliver better margins.
Okay, ma'am. Can you quantify this one-time increase in that other expenses you are referring to?
Yeah. Rather than quantify, I can tell you the nature of those expenses. As you know, we got OAI, for Goa Plant 2 earlier a few months ago. And after that, we started 6 months ago actually, and we started remediation action. So there are some costs of remediation. There are also certain costs which have come at the site to improve certain equipment, layouts, so you would have seen plant machinery repairs having gone up this quarter.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Sudarshan Padmanabhan from JM Financial PMS. Please go ahead.
Yes, sir. I'm just continuing, from the previous participant on the remediation costs. I mean, given that we are looking at around 17% is what we were initially looking at in terms of run rate for this year. Given that we had some kind of a, I would say not necessarily one-off in this quarter, but because of the spend towards regulation, one, is there a change in your guidance, and how do we see the margins in the second half and the spend towards remediation and some of these costs, getting rationalized?
So in the second quarter this year, a couple of things are going to happen. We expect international formulations to do much better than it did in the first half. Also, a lot of the season products in India business, their incremental sales did not come in Q2 the way it was expected. So we do expect that in the second half, our margins will be much better, helping us come close to our guidance. Agreed that in the first half, and probably when we made the guidance or gave the guidance, the remedial costs and their impact may not have been fully understood. But every endeavor will be done for us to try and match the 17%.
Would there be more costs, ma'am, on the remediation side in this quarter, or some of these costs to continue? And how much would it be in contrast to this quarter?
We expect for one more quarter to have some impact on the remediation cost.
Sure. When I'm looking at the US business, it looks like, this quarter has been pretty strong. Just to understand, was there a quantum contribution in terms of profit sharing in this quarter? I mean, if you can quantify it, it would be great, but just to understand going forward, should we see the similar run rate to continue, or what is the kind of run rate that we are on?
So in terms of value, yes, we are confident of continuing this kind of top-line deliverance on US numbers and even better. Regarding profit share, etc., I think you will agree that with our customers, there are several confidentialities, so we don't feel free to discuss this thing now in the calls. But yes, since our model is of cost and profit share, our model is of a certain amount of dossiers to be sold, there will always be some amount of dossier income or profit share in our US sales element.
But in this quarter, was it much higher than usual?
Not really.
Sure. And one more question from my side is, if I look at interestingly the balance sheet, we have, higher cash but we've also, taken higher long-term loans. I mean, interestingly, not, are we looking at any kind of an M&A? I mean, why should, we take loans and the cash levels remain higher? Is it because of M&A or is it just the closing of the pending impact on it?
Yeah. So if you see the cash, one is about certain investments we have made. While our capex, if you see over a period of last year and this year, and certain strategic investments such as investment into US, we have incremental funding on the other side. So we have taken a ECB basically to cover up the certain cash requirement for the acquisition. Yes. Maybe there is something.
Yeah. See, the drawdown of the ECB temporarily parked for usage for future requirements. So temporarily, you may be seeing some cash on hand.
Sure. And if you are looking at M&A, what would be our priority? I mean, in terms of filling up the gap?
We can't hear you. There's a lot of noise in the background. Can you repeat that?
So if we are looking at M&A, what is the priority that we would be looking at? I mean, would it, will it be filling up an India brand? Would it be looking at more of, assets towards the international market?
So I don't think we said we are doing any M&A, but we are always looking for one, to be very honest. Regarding M&A, you mean acquisition. So in India, we have always been scouting for good brands, and internationally, we are keen to look at good facilities, but neither comes cheap and neither is available, to be honest.
Ma'am, one final question before I join the queue is, this quarter you mentioned that it has been encouraging on the side, and if I look at, we have built whatever the investments that are to be made and whatever that has to be done in terms of investments towards faster growth has already been made. Can you talk a little bit more in terms of what is driving this growth? Are we seeing more prescriptions coming in from specialists as compared to that of GPs in this segment? So some color on this, and where do we see this proportion of segments in the next 3 years?
Yeah. So thank you for that question. We are ranked 20th among in the industry when it comes to the number of prescriptions we generate, and you'd be surprised that we are a couple of ranks above Glenmark as well for the absolute number of prescriptions we generate. At the same time, we are ranked 30th when it comes to our achievement in rupee terms in the market. That simply means that the percentage of acute contributing to our total top line is skewed very heavily in our case compared to many other companies. So we do generate prescriptions, but typically they are for one strip of Cyclopam, one strip of Febrix Plus, amongst other things. Going forward, this category of subchronic that has been developed by us, that is prescriptions coming from other than general practitioner, as in pediatrician, ENT, ophthalmologists, dentists, gynecologists. These are called mass specialists, and when they write acute products, they write the product for a longer time usage, because beyond treating symptoms, they actually want to treat causes as well. So that has been the orientation of the organization, to have a better contribution come from other than general practitioners and from mass specialists. And we see that reflected in the performance, especially in the last 2 years, when because of COVID, at times acute did very badly and other times it did very well. But returns coming from categories such as stomatological, ophthalmics are quite stable throughout, and that gives a good indication of the kind of work we are doing with these specialties in the market. And we believe because of this, going forward, we will be able to de-risk ourselves from the 30% or contribution we have to top line, 30 to 40% that comes from anti-infectives and respiratory. I hope that answers your question.
Sure. One final question, if I can squeeze in. With respect to, the European markets, which has probably seen a temporary decline in this quarter. Just want a little clarity, given that a part of this is, tender through AOK, and of course, a part of this is also fixed volume contracts. Would that be a right assumption that there might be variance between the quarter, but you have a fair amount of visibility in terms of the full year delivery? So as I think you mentioned earlier on, pay the catch up going forward.
Yes, there's good visibility for orders ahead. This was a little bit unanticipated by us as well as the front-end client. Okay?
Sure. So thanks a lot, Ma'am.
Thank you. Participants, if you wish to ask a question, you may please press star and 1. We have the next question from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. So one question is that, since you have lost the order in the European business and we do have a good order visibility, what kind of guidance you give for the Europe business this year? Because earlier we were anticipating that, we will be able to do around 18 to 19% sort of growth in the in Europe.
Yeah, Rashmi, we have not lost any orders. It's just that this fast-moving product was overstocked for a continuous thing, by our front-end partner in anticipation that it would be flying off the shelves, which did not happen from July, August, September, and October. Now we have started receiving orders, which will be manufactured in November and dispatched in December. So we have not lost any tender or any orders. It's just overstocking. Just to clarify, the AOK tender is going on properly. But just out of abundant precaution, I said that we would do somewhere around 375 crores.
Okay. And in the US business of 81 crores, have we recognized any profit share this quarter?
Yeah, there is always some element.
But from the brinzolamide and all what we were anticipating, has that profit come in? If you can quantify, and if you can say that in quarter 3, quarter 4, will that be sustainable?
I will answer the second part first. Yes, in quarter 3 and 4 it will be sustainable. On the first question, as I said earlier, because of certain strategic confidentialities with our front-end customers, we are not now free anymore to disclose numbers on this.
Got it, ma'am. And what is the R&D guidance? Because, in first half, you all have done around 5.5% of sales as you have spent as an R&D expenses. So, any particular guidance if you can give for the entire year?
It will be around the same, Rashmi, 5.5%.
Okay. And my next question is related to debt. Whatever debt we have taken up, is there any repayment schedule, or, for next 2-3 years, the debt more or less number would remain same?
Yes. So, Rashmi, we have term loan which is repayable a quarter-on-quarter basis. So this particular year, in second half, we have repayment close to about 24 crore, and next 2 years in the range of about 45 to 50 crore each year.
Okay. Okay. So debt would be reduced by that extent?
Yes.
Okay. And in terms of the domestic business, while I can understand that, we have not shown growth in anti-infective and respiratory segment, but I'm also seeing that, there is no growth in anti-diabetic and pain management. So if you can explain, what is the reason for that, and how can we ensure that, in next 2 quarters, from where the growth will be driven, around 14 to 15%?
Yeah. So on pain in specifically, Rashmi, you might be aware that I've never spoken of pain as a therapy area of focus for any of our divisions. So if pain has done well for us, it is probably because of a portfolio which is being supplied by our institution division, which caters to, armed forces, railways, ESI and those. It just gets reclassified under therapies doing well or not. It is not specifically from any of our ethical divisions. Okay?
Okay.
Yeah.
And finally, on the EBITDA margin front, you said that, there will be one more quarter where we will be seeing this remediation cost coming up. And in the first half, we have done around 14.6%. So, to achieve around your guidance numbers, we will have to do around 20% EBITDA margin in second half. So is that achievable, or you feel that, it is a bit challenging given the remediation expenses and R&D and everything will be high?
So Rashmi, we are strategized to do the kind of value sales which can allow us to do those percentage margins. But of course, there are always challenges. So I specifically said we will be trying to achieve the 17%.
Okay. Okay, ma'am. Thank you. That's it from my side.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. Participants, you may press star and 1 if you wish to ask a question. To ask a question, ladies and gentlemen, you may press star and 1 at this time. As we have no further questions, I would now like to hand the conference over to the management for closing comments. Over to you, ma'am.
Yeah, thank you everyone for your active participation, and have a good weekend. Thank you very much.
Thank you. Thank you.
Thank you. On behalf of Dolat Capital, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.